Hello, traders. It's 8:01 a.m. Chicago time on Wednesday, the 18th of September, 2019. It is FOMC day today. So just keep your powder dry for later in the day and be patient this morning. There's a fair amount of tweeting going on from POTUS. There was an announcement just a few minutes ago that he's instructed the Secretary of the Treasury to impose further sanctions on Iran. And this has caused a quick pop in crude, which brings me to another point, a reminder that crude is trading. Crude is trading November now. We've rolled into November. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This is episode number 1598. This morning. The market sentiment is really mixed. Crude is off 1.8%. It's trading at 58.03 on the November contract, down $1.10. Followed by the cable on gold. Gold is down $1.10 also. Pretty much everything else is off, but not that much. The Nasdaq's off 9.5 points, which represents about 0.1%. And the S&P 500 is down 2.75 points, which is also 0.1%. The DAX is maintaining a good, a positive. So is the Euro stocks. The leader today is the bonds, U.S. bonds, trading up 25 ticks, 0.5% in the futures pricing, and the Bund is up 39 ticks. The 10 years up. The 10 years up 9.5 ticks. So that's where we stand. Allocation is to risk this morning or to safety this morning. Ahead of the FOMC, we had a very quiet, kind of wobbly day yesterday until we broke out to the upside and back into Friday's range. Crude dropped a fair amount, falling out of the 60s on WTI and is currently trading at 58.03. So the crude is discounting a little bit what is happening in Saudi Arabia. In terms of what's ahead, we did have some releases this morning. Key of which was the inflation rate from Great Britain came in at 1.7, lower than the consensus of 1.9, and much lower than the prior 2.1%. We had a slew of low-tier numbers out of the EU. The Canadian inflation came in at 1.9 versus 2%, and which gives those two banks room to reduce rates. And this morning, a half hour ago, we got housing starts in the U.S., building permits, and so on. Looking ahead, we have gasoline inventories expecting a draw of 2.496 million barrels, about 2.5 million barrels, and gasoline expecting about a 500,000 barrel drawdown. And then at 2 o'clock, we expect the Fed interest rate decision. The market currently is pricing in approximately a 54-ish% probability of easing 25 basis points versus 46% probability of holding steady. So the market's tipping a little bit towards the side of the market, towards the side of the FOMC, reducing by 25 basis points. And we have a press conference at 1:30 p.m. So that's what's ahead. Let's take a look at what was expected yesterday versus what we got yesterday. The primary expectation is for the market to be responsive up, get back into the 3,000, and then drop out and potentially test down into 29.89. Did not happen at all. Yesterday was just incredibly dull, very, very tight range. An inside day for most of the day. The secondary scenario is a test below the low and then a pop higher towards the upper end of the range. So neither one of these scenarios worked out. The market was much more muted much more muted, and frankly, pretty tough to read. I mean, we watch people kind of taking their signals and stepping out of trades because they aren't going anywhere, including myself. It's just isn't. It's just we're not seeing any follow through, right? The market's kind of in a holding pattern. Um, why these lines moved, I have no idea. Um, so here we are. Yesterday we opened at 29.98 and a quarter, tested down to 29.9650, and then we rotate back up to 3,001 and a quarter, right through the prior day's point of control, pushed it. So we took out the 3,000, and then we sat sideways and built a really fat profile at the 3,000 again. So we are mimicking the prior day here. Look at this. Just consolidation and balance 2 days in a row, basically having the same consensus, basically looking at the market and saying, we're good here. We're good at these prices. And then later in the session, we do finally get our IB stat fulfilled. For those of you who don't know the IB stat, it basically says that there's approximately a 98% probability that the first hour's high or low is breached. Breached means taken out by at least a tick. Historically in the ES over 2,500 days, uh, uh, trading days viewed. So at some point we expect one of these yellow lines. These are my IB lines. We expect these to break. So we finally get an impulsive move, right? We kind of almost had an impulse back here. We had an impulse back here, but these impulses don't have very good follow through. This held its mid, but then we didn't take out the high. We failed to take out the high, and that's the first target on an impulse pullback setup in the ES. And we finally get an impulse move, and so we're looking for a pullback to 3005, but we ran out of time. Ran out of time. The market closed. So it just kind of, frankly, it just stinks all around. There's just not all that good an opportunity. Here's the trade that we were after on the impulse up. Pull back 3005. See, it goes to 3005.75, and then we expect a rotation to the impulse high right here. Doesn't really do it. The entire session is kind of spent. Most of the session, at least the Asian hour, is spent in this downward slope. In this downward slope, the Europeans open. They reverse a little bit. We tangle with mid and VWAP for a little bit. We end up giving up to the short side. We end up with a perfectly centered overnight profile, complete balance going on here on really light volume, especially for roll. The volume's only 119,000 on a roll week. It's very low, very sluggish trade. So we have the mid, we have VWAP, and we have the point of control on top of each other. Essentially, the overnight session is saying, meh. Again, not much to price. It did hold above the 3,000 though. It tested 3,000 and a quarter right here. It did hold above the prior balance zone. So that's kind of a clue that we may still have a chance to get back up and challenge Friday's structure. That's what's up overnight. In terms of order flow, looking at December, and by the way, the pace of the roll so far is that it's pretty much all done. Again, I'm going to pull this image here from Convergent Chat as one of our head traders posted this. Here it is. The pace of the roll is such that it's pretty much complete. 97% ahead of the FOMC announcement. And so the volume delta and so on has a meaning. So we've pretty much hit our 80% roll open interest. So the roll is pretty much behind us at the moment. Let's take a look at what we've got overnight in the December contract. Here's the close. Back here, you can see a lot of volume, and then overnight we have this offer that's been sitting at 3,008 and a half, moved down to 3,008, and in this cluster up here, but the market has not moved back up there. We do have this price down at 29.98 that has also been bid for a while. Not a heavy bid, a few hundred contracts, a couple hundred contracts, but overall you can see it's a dark cloud throughout. We can also see the effect of some of these news events and tweets and whatnot right in here. This is the Iran sanction tweet, um, and so that's huh? That's odd. These are odd. I gotta fix that. So that's what we have currently. Not much to say, to be honest with you, in terms of liquidity and so on. It is expiration in 2 days, and um, there isn't very much that we can kind of feed off of at the moment. So let's take a look at. Excuse me. I'm still getting over a kind of a sinus throat thing. Let's take a look at what we're expecting for today to wrap this up. Um, Here we go. So, what are we expecting for today? Now, remember FOMC. Um, Overall, the primary expectation is an open auction in range. I'm expecting responsive selling to bring us back down again towards the prior raise point of control, potentially the overnight low. I'm expecting us to push to have an impulse to complete or continue yesterday's high impulse into the high, and then I'm looking for FOMC to kind of interrupt the auction here again. FOMC at 2 p.m. Eastern, 1 Central. And then from there, if they cut, we might see it trickle back up into this 3016 and 3019 area for scenario one. Otherwise, we're looking for it to roll over and start making its way down towards 2984 would be the potential push down if it does, if the FOMC does not cut or if it kind of changes its tune in the conference. Very interesting spot to be before the FOMC because we're really not that far off of the all-time high, which is at 30.31 or so in this contract. Secondary, I'm looking for the market to just respond immediately to yesterday's closing price and then move up, push into the Friday range even further, and then encounter some resistance in this 3012 area for a push back down, and then I'm looking for it to balance here until the FOMC decision, and then we are most likely, if that happens, we're most likely looking at a market that is expecting lower. So we'll see how that plays out. We'll see how that plays out if there is a surprise. Of course, it's the same target, but overall, the question becomes, do we move up and respond to the close, or do we move down and respond to the point of control? My expectation, of course, is that price moves towards volume first, and that's why scenario one is a drop before it pushes higher. Knowing that it's FOMC, means that we kind of need to keep our powder dry and just relax, um, relax while the market kind of positions itself not only for FOMC but for rollover. There's a lot of risk on the table here for some participants who may be short calls at 3,000 or 3,005 or 29.95 and keep having to hedge that exposure using futures by buying contracts, maybe short puts below 3,000, and they keep having to hedge their delta that way, and so on and so forth. So we're at this millennium figure plus FOMC plus quad witching. It's it's kind of like it's kind of like the Middle East. There's just a lot going on there. Um, so just relax, relax, let the market figure out what it wants to do, and it may be one of those days where you don't trade until after the FOMC. I'm not suggesting that you listen for the FOMC and then just jump in, but chances are it may not make any sense. The movement may not make any sense until the release is done. Okay. Good luck today. I'll catch you tomorrow morning. Convergent members will be trading the FOMC live today. The webinar details have been sent out. Take care.